Okay, welcome back. It's the weekend video. Um, what am I going to say? Sorry, I missed last week. I was away in Switzerland for a few days with my father. Um, so it's been an interesting week and a dead week. And so in some ways we have something to talk about. In other ways, there's nothing has changed. So for the moment, let's just go through. Or for this video, let's go through. Starting at the 4-hour charts, and we'll work back the ways to the short-term charts. You'll have to forgive my voice. It's probably going to go down 8 octaves this time. I've got a flu, so forgive me if I just croak in the middle of this, and I hear it starting already. But anyway, all right. I'll start in Eurodollar as usual. Something interesting I'm just after thinking about there again. Let's raise that right off the bat. Okay, so I'm following this 5-wave pattern, possible 5-wave pattern to the upside. So we've got this in green labels here, and a possible 4th wave correction underway at the moment. Now, I just want to raise one issue that I have with this. Until recently, I was counting this as the high right here, and we were working down in 5 waves and a 3-wave correction. Now that wave count has not been invalidated yet, even though I have moved off it, moved on to an alternate. That wave count has not been invalidated yet, and the very fact that we've still got this nice 3-wave pattern within a trend channel, and we're on a downwards slope in general in 4-hour RSI and MACD, and I was in general looking for let's say a flip to or a cyclical downturn in momentum, because we had this very large move up in Eurodollar over the last year or so, and the momentum has been pretty much pinned to the upper line, pinned above the center line, or at least above 40 for that period. So, if we're looking for a turn, this is a good period, as good a period as any. So, in that sense, I haven't ditched the previous wave count, which was the immediately bearish one. But for now, we'll still work with this possible flat correction in wave 4, with the 5 waves down underway in wave C of 4. So let's go down to the short-term chart. I'm just mentioning that just to kind of be cognizant of the fact that, if we start to see a further acceleration to the downside, and most especially if we get a break of this previous wave 1 high here, which is at about 119.60. So 119.60 is probably key support right now, because it's the previous wave 1, and we don't want wave 4 to break into the wave 1 price territory of wave 1. Okay, so let's get down to the short-term chart and see what's happened today. On Friday, pretty much nothing has happened. The market has just drifted sideways because there's been no counterparty. There's been no. The US have been taking it easy today, and you're damn right. We've got this possible 5-wave pattern, and especially since this drift sideways has occurred today, and a kind of contraction in the range there as well. And I can internally there, I can pretty much pick out 5 waves complete within this triangle. So you could go A, B, C, D, and E. So this wave 4 triangle could well be complete at this stage. On Monday, early trade on Monday, I reckon 123.36 will have to hold. Price can't break 123.36 for that triangle to remain valid. And if that does happen and we get a break of the previous low, which was 122.80, well, then you've got to move down into a fifth wave. Okay, so that is euro dollar, a possible completing wave 4 flat correction, and also keep an eye on the alternate account. So next week we should see a bottoming, and if we don't see a significant turn off the bottom next week, well, then we'll probably switch back to the alternate account. Okay, so let's move on to pound dollar. So this is the 4-hour chart in pound dollar. I noted this evening that the alternate account here, my best guess for an alternate account here is a failed fifth, possibly a failed fifth wave in wave 5 brown here. So, excuse me, just like in euro dollar, we have a 5-wave pattern to the upside. 1, 2, 3. This very long and complex 4th wave, and out of that 4th wave, we had a 5th wave in wave 5 brown. The best, I suppose, I don't like failed 5th waves, first of all, off the bat. I don't like them. Even though they do occur, they're so rare that it's not worth pinning your hat on it, basically. But for the moment, that is the best alternative that I think we can come up with. This previous high is most definitely not wave 5, because the action off that high is pretty easily counted as a complex correction wave 4. So with an internal contracting triangle. So let's get down to the short term chart here anyway and see how that failed fifth may why that came up into my head. Okay, so the main reason I'm contemplating that alternate account is the fact that this previous wave 1 high here at 139.32 is close to being broken. We're now sitting at 140.30, so we're about 100 points. And if that 139.32 level breaks, well, then we'll switch to the alternate account. But so far, we've got a 3-wave decline, a possible 4th wave here in pink, and with the expectation that we get a rally into resistance there at 143 again to complete that overall 5-wave pattern, which is 1, 2, extension in wave 3, 3-wave correction in wave 4, and then should see a 5-wave rally out of that. Okay, so pound dollar is, just like euro dollar. Let me rephrase that. The dollar crosses in general are at a major turning point, and well, I know I have let's say I've been expecting this for a while, but the patterns are really, the short-term patterns are really starting to agree with the longer-term outlook that the US dollar should post probably a rip-roaring rally this year, but most definitely a very significant advance. So that's the reason why I'm kind of introducing these alternates in the short term, is because we should be expecting it, within a matter of weeks, because these larger patterns will close out quite soon. Okay, so let's move on to the corollary of cable and euro dollar, which is my favorite, dollar yen. Okay, so we had a nice spike this week in general, and I had been counting it as an ongoing 5-wave pattern. This decline over the last couple of days has, extended. It seems to have lost steam this evening, but I think the Sunday night trade or the overnight trade on Monday, Sunday into Monday, that will probably either confirm or deny the short-term bullish, let's say, labeling at the moment. Excuse me. Because we've got this wave 1 high here at 105.90, then I don't want to see the wave 4 decline below that. That's at 106.09 at the moment. So it's really close, and it's it's inconveniently close, let's say. So quite early on Monday, we should get a kind of a confirm or deny on this short-term pattern. There is another way of looking at this. I mean, you could say that you have 1, 2, 3, 4, and 5. Maybe. I don't like that myself. But anyway, either way, in the short term, 105.90 is the key level for the moment. I do like dollar yen in general right now. I mean, if this wave 1 is actually complete at this level, then we should get a 3-wave decline either way, and we should stay above support here at 104.61 either way. So for the moment, I'm keeping, let's say, tentatively positive outlook on dollar yen. Okay, so let's move on to stocks. There was no trading today, obviously, but the short-term pattern, I have switched it up this week, so I'm sorry if it kind of caused a bit of confusion for anyone. Let's go up to the 4-hour chart in general. Let's see. This might be easier to concentrate on for the moment. So we have still working with this idea of series of 3 1-2 waves to the downside. This wave 1 gray here is either completing or is complete at the previous low here. So I'm kind of on the fence about that as well. So either way, I think we could well be looking at a pretty serious decline over the next month, and next week should indicate whether we get that or not, I think. So let's move into the short-term chart. So, well, before I go, what I'm looking at is 1, 2, 3, 4, and 5. So you're talking about 5 waves in green with an extension in the 3rd wave, which is what I'm labeling right now. And I think this 3rd wave in green here could well carry the price below previous support, long-term support, which would be at this previous 4th wave here, around 21,000, and could easily carry the market in below 20,000 again. And the very fact that nobody really expects that at all, nobody expects a serious decline at all, so we should probably be expecting it. Okay, so let's get down to the short-term chart. So this is our wave 2 in blue, 1, 2 off that. We're working on wave 3 in green. So the kind of, let's say, the unsure element to this is where this wave 1 in gray completes. At the moment, I'm counting possible 1, 2, 3, 4, and an ongoing 5th wave in wave 1 gray. But it is also possible to count that previous low here labeled wave 3 as the complete 5 wave down. You would have to do a little bit of kind of mental gymnastics to get there, but it's not impossible at all that this is the previous wave. This previous low is the low of wave 1. And the reason why I say that is because of the rise, the fall, and the rise that's happening right now. So I think if we get a break of 24,446 on Monday or Tuesday, well, that will confirm a 3-wave pattern, and that will confirm the alternate count here. So a 3-wave rise in wave 2. And at that stage, the previous high here will be the key resistance in the short term. So for Monday, I'm going to stick with the current wave count. I still think we'll get a completion of 5 waves down in grey, with possibly an extension in wave 5 of 1. So the next week should complete wave 1 grey and complete wave 2 grey, which will mean we'll probably get a little bit of stagnation over the next week or so. Yeah, probably the next week, and maybe even by Friday we might start posting losses again as wave 2 grey completes, and the market should start turning down into wave 3. And keep in mind that that's a third of a third of a third wave. Okay, so let's move on to gold. Let's hit the 4-hour chart first. Excuse me. So again, we're kind of, this is the damn awful thing about corrections. It's so hard to pinpoint. In theory, it's easy, call a correction. But in reality, while you're actually working within the market, it's so hard to pinpoint an actual correction and when it finishes. There's just so many alternates that you can go through. There's so many combinations of waves that can, join up together and create these, fantastic structures. Maybe I like them for that reason. I don't know. But one thing is always for sure. You're pretty much always assured that a correction is a correction because of the stark difference in price action. This versus this. And there's no way that you could count that any other way than an impulse move in 5 waves. And there's no way that you could count this in any other fashion other than a corrective decline, sideways corrective decline. So where do we go from here in gold? I'm at this moment in time incredibly bullish, and that being said, the current short-term count does require another decline of about $25 to $30 to kind of close it out, to close out the pattern satisfactorily, let's say. Okay, so this is a 4-hour chart. We're obviously charting a correction in wave 2 green. So let's go down into I have a 30-minute chart here. Let's pull up the hourly chart to kind of chart this a little bit better. So there's wave 1 green up here. So this is a pretty damn complex flat, possibly, or it could even work out to be a complex triple combination, depending on how next week goes. So we have 3 waves down in A, 3 waves in B, and a nice sharp decline I'm counting as 5 waves down, which would complete the 5-5-3 formation of a flat correction. So, sorry, 3-3-5, forgive me, 3-3-5 formation of a flat correction. So wave C should be 5 waves to complete. So I've got the short-term trend channel is pointing to about 1295 to 1295 to 1300 as the closeout. We've got a nice cluster of support here between the previous lows, which is 1307 to 1303. So you would like to see a break of that 1303 level to complete, to let's say satisfactorily complete the overall pattern. So for next week, I'm still expecting this little flat correction there in wave 4 to complete early, probably Monday, and then we'll see a further decline in wave 5, in wave 5 of C. Okay, so the only other way that you can look at this at the moment is uh, we have 3 waves in A complete, 3 waves in B complete, and maybe we get it 3 waves in C. Excuse me, yeah. And that 3 waves in C would make this a triple combination correction. And hey, why not? I mean, if you've come this far, why not make it a triple combination? So this is one to watch out for. Given the sharp nature of the action already, I'm kind of sticking with the 3-3-5 formation in a flat to complete. But either way, it'll still bring the final completion of wave 2 down to about the 1300 level. Okay, so the final market is crude oil. We've got a very possible alternate here in crude oil too. We have a possible wave 1 with maybe a 3-wave correction in wave 2 already underway. And the reason I've kind of brought that up is because the rise over the last couple of days has been in a pretty clear 3-wave pattern. The rise on Thursday, because there was no trading today, is a pretty clear 3-wave pattern so far. If we get the market turning down below 63.72 on Monday, the early trading Monday seen as it's about 100 points. So you might be talking by Monday evening if the market turns down off the open and starts moving towards this initial support here, 63.72. Well, then would probably veer towards. That would favor definitely the alternate wave count here. So that would be wave 1 and wave 2, and we'd possibly see a decline back into this previous wave 1 high here at 62, about 62.20 to complete that larger degree second wave. Either way you look at it, either way you slice this, I still think we're looking at higher prices in the medium term over the next month or so in crude. So we're just kind of looking for that kind of sweet spot to look for an entry to ride possibly a wave 3, a third wave to the upside. Target still stands at about $70, give or take a chunk of change. Okay, so that's the 6 markets closed out. I hope you all have a lovely Easter weekend, and we shall gather here again, all of us who survive, on Monday evening to go over what's occurred. Okay, Godspeed, everyone, and we'll see you Monday. Bye bye.